AI will, outpace bank advisors very soon, if not already.
Do I really need humans and people to crowdsource that management of the funds and allocation of the funds, or can I have it done agentically?
If you ask AI to optimize a portfolio, it will tell you to have a large allocation to Bitcoin, no doubt, because the historical data will tell you that. But you'll not get that answer more or less anywhere in the world if you ask an advisor, right?
These data centers that they're building out, they're the size of Manhattan, right? I mean, these are huge, right? They're not just a little building in a city, it's the whole city, right? Hello, everybody. Back again, and super excited today to have Andreas Steno join us from formerly Steno Research, still Steno Research, I don't know, but an interesting background. If you've paid attention to some of our spaces, you will have heard him on those, and if you follow his Twitter, you will see that he uses a lot of Truflation as well. So really excited to have Andreas here, share a bit on his background, but we do this show super excited because it's the most exciting time to be alive right now. And so how do we live in this time, and what can we do in this time to capture some of the opportunities that this change is bringing about? And so that's why we're super excited with all these different changes taking place across all the different technological platforms. And Andreas, thank you for being here.
Thank you very much for having me, Stefan.
Yeah. Maybe just share a quick background on yourself and your, so how you got to where you are today, your journey to becoming an entrepreneur, setting out on your own. How did that come about? And what was the genesis of Steno Research?
Well, to be honest, to be honest, Stefan, it was to some extent something that I didn't plan on, if you know what I mean. When I started my entrepreneurship, I worked in investment banks for a long while during the initial phases of my career, and ultimately ended up managing the entire research team of the biggest bank in Northern Europe, Nordea. And during COVID, I slowly but surely felt the pressure to align my research with mainstream thinking, with the political messaging from the local administration and all of that. And that annoyed me. So as you know me, Stefan, I'm, in many ways, I'm a contrarian by heart. So when I felt that pressure, I pushed back, and I did so very deliberately during my time at Nordea. And it ultimately ended up in quite the soap opera because I wrote a research paper criticizing the COVID lockdowns and the economic consequences and all of that. And it was a very, very, at the time, a very controversial take, but also fearful step for me to take, because I was aware of the consequences, and ultimately I actually ended up using it as a platform to form my own company, right? Because it was crystal clear to a lot of people who read my stuff that I was getting censored, basically. And as you're a good example of, we simply need independent takes on the change that is happening. We need independent takes on economic data and so on and so forth. So it ended up being almost a perfect platform to launch upon, even though I didn't really necessarily plan it up front. But I knew that something had to be done. We needed more independent takes on what was going on. And I still think that's the case even after COVID.
Yeah, even more so, right? And I think one of the things as an entrepreneur, as you break out, number one is you have a differing opinion to the majority, right? And I think that was sort of the genesis of you breaking out or being canceled, maybe is the word that sort of became sort of the name of the game. But ultimately, how much of that, given that you set up on your own, how much of that was really the drive behind, I got to prove everybody wrong and I can prove that I can do it myself, especially those that canceled me?
Yeah, it was a massive driver for me. I have to admit to that. I also think that I managed to proved them wrong to a large extent. A lot of the stuff that I wrote during COVID ultimately proved to be right. So in that sense, it obviously became a driver for me. I don't necessarily think it is the driver anymore. The demand for independent takes is certainly on the rise, and it's still rising. And I think during this era of AI, it will become even more relevant to pinpoint when we see herd behavior, consensus conclusions that are off target, and stuff like that. So I actually think that the quest or the vision statement is the same still, even though, the initial quest was probably to prove some people wrong during COVID, but it's no longer relevant. The relevant thing here is to provide people with off-consensus views and off-consensus data points when the consensus is wrong. And consensus is often wrong.
And I think you've proven that, right? I mean, I think you've had the ability to take advantage of a lot of these new platforms that have emerged, allowing you to have a voice independently, allow you to formulate your independent opinions and structure them, but also grow a community in those platforms, right? And so I think that's really, again, another area why I'm super excited, because these platforms have now emerged, allowing you to grow a following, and you have your contrarian opinion, which I think is amazing, and that's why I think it's a great time to be alive.
Yeah, it is different, and I think some of the platforms you're talking about, obviously we're talking about X, among other things, right? I've always loved X, and back when it was called Twitter, it was probably the first social media profile that I really spent a lot of time on nurturing, and still today it's probably the largest channel I have. I have quite a following on LinkedIn and to some extent in Instagram and TikTok. I'm too old for those channels, by the way. I've never really. I'll have to figure out how to dance a macro movie out or something like that to really exploit those channels. But kidding aside, it is very, very important for me to use these distribution channels, and I know that you use them a lot as well, because especially initially, a lot of local media outlets, they didn't want to bring my stuff. That was how it was, right? So I had to look for other ways to distribute.
Yeah, no, and I think it comes about to distribution, right? And having that channel to the user base and your audience. And I think more and more in the financial world, which I think a large portion of both your users, our users equally, are in the financial segment, interested in macro data, interested in movements in the markets that then they can interpret as indicators to make investments. And I think you do the same. And I think one of the things that we're seeing is a big transition, which is, I think, the interesting factor right now is data. You've got the way to interpret the data, work the data, and now we have this element that builds applications using that data, AI, right? So how do we capture AI? How do we leverage AI? And how are you using AI in your business to actually help with better interpretations, better translations of the data into signals, right?
And so first of all, in this world of AI, I'm very well aware of the pitfalls using it, but I'm also well aware of the potential opportunity in AI. And to give you a very concrete example of how I've used AI in my own investment decisions, in the fund that I run, I use AI to pattern recognize backwards in time, meaning that when you look at hundreds or thousands of time series observations, AI is much better than a human individual to pattern recognize the development seen in these time series back in time. So a very concrete example is that we try to nowcast the economy both on inflation, a bit like you do, and we use you as an input basically. And we now cast growth, and we now cast liquidity in markets. But when we transform the nowcasts into actual trading signals, we ask the AI agent to tell us which trades have typically performed the best given these inputs, right? And tell it to use the entire time series history that we are able to provide it with. And very practically speaking, running a fund, even though you hire incredibly qualified portfolio managers, they're not as structured as the AI agent, obviously. They typically get tired from just looking at the same input over and over and over and over. The AI doesn't. So all of the sort of very mechanical decision making that you have around investments in a fund are much better dealt with via AI than via a load of portfolio managers. That's my humble opinion on it, and it actually makes, to some extent, makes the life of an entrepreneur easier because you need a smaller team, given that, right? Yeah. Fewer chefs to discuss the input. So everything is centered around how you feed the model, rather than whether the input needs to be orchestrated in another way, if you know what I mean.
And when you say feed, is it more the prompting that really matters? Is it more the data inputs that go into the model? Because ultimately, you want as many inputs into the model as you possibly can have.
Yeah.
Right?
In principle, yes. What I'm very aware of is that, if you prompt the AI in a way that is very mainstream, you'll end up with very mainstream conclusions, which to some extent can be okay. Yeah. So you need to prompt your AI with an input that is not mainstream and that is not widely known for it to have an edge, in my opinion. Yeah. A very concrete example of this, if you ask a large language model to just design a portfolio, it will most likely rest upon public information that is pretty mainstream when it designs the portfolio, and it will therefore give you a portfolio that is very similar to what you see elsewhere. That can be a very, very decent input for many. But if you're running a fund trying to capture alpha trends and trying to capture trends that are uncorrelated to what everyone else does, then you obviously cannot ask an AI agent to just do whatever everyone else does, right?
What everyone else does, yeah.
So I think there's a difference between running a hedge fund that needs to provide an alternative source of returns for its investors and running your own portfolio. If you run your own portfolio, you're probably pretty good off by just asking an AI agent to just create that portfolio, right? Because it will give you something pretty middle of the road. And it will probably be much better than if you ask your bank, which is quite interesting, right? Back to the initial discussion we had, Stefan, around me not being satisfied in the banking system. I think AI will outpace bank advisors very soon, if not already. And a very simple example, right? If you ask AI to optimize a portfolio and ask it to, just ask ChatGPT, a large language model, and tell it to say, I want to optimize my portfolio and I want to have the highest Sharpe ratio, to the best relationship between returns and risk possible. It will tell you to have a large allocation to Bitcoin. No doubt, because the historical data will tell you that. But you'll not get that answer more or less anywhere in the world if you ask an advisor, right? So there's already a big difference between asking a large language model and a human advisor on these topics.
And we launched a product, Nuon, where we were actually asking the crowd or the community to participate in yield optimization and driving a return. And if they hit their hurdle rate, that they would then be rewarded. So it was very much success oriented. And then the protocol would retain the management fee to then integrate with new yield. And it was all on the blockchain, right? So it was all on the blockchain. And where you're now getting to a point where AI is so good, do I really need humans and people to crowdsource that management of the funds and allocation of the funds? Or can I have it done agentically, right? So ultimately, the agents are out, seeking the rewards and then measuring and identifying a risk reward ratio. And so that to me is really, I think, obviously where it's going. And the banking world, they're still on their mindset where they charge fees, astronomical fees for really just no work, giving you their capital, man. I mean, to me, that's just really such a phenomenal experience. That it's just, and the service that you get is still manual. It's labor intensive. It's slow. Why would you do that in a world where you're looking for alpha, you're looking for differentiation? And yeah, is it because of security? Is it because you are more independent and as a result more agile, and then can ultimately seek better rewards versus a pension fund that has responsibilities, is heavily aligned with government compliant requirements, is protecting people's let's say protecting people people's savings, etc., right? And is they have to move slower as a result and are a lot more risk averse and are happy to pay more fees and put money into bonds than looking for alpha all the time. How do you see that changing? Will that ever change, or will you be the new form of pension, and people will just come to you and save with you, and we scrap all of these pension fund requirements?
But Stefan, it's actually very interesting that you bring up this topic, because when I initially applied for the license for the fund via the central bank in Ireland, we tried to tell them that this was a very systematic fund, right? And we based our decisions on nowcasts and pattern recognition by AI agents and stuff like that. And then they were like, hey, do you take the decisions, Andreas, or is it a model? And I was like, it's of course me. And they were like, okay, and then there's no issue. But as soon as I even hinted that it was a model-based decision process, they were like, no, you cannot do that. This was a completely different ball game to them. So you're right that authorities are still very scared of AI agents taking decisions, even though we can prove in many ways that AI agents make fewer mistakes, which is, even though we're able to prove that, authorities are still skeptical, right? And I guess by the end of the day, I think you're right that it's a compliance discussion, right? If you go to your doctor and he makes a mistake, then there's kind of a well-known process from a compliance perspective on how to deal with such a mistake. But what if you asked ChatGPT for medical advice and it told you something wrong, right? We don't really know how to deal with that yet. So I honestly think that this is a matter of getting a few court cases tested on the topic before we get the legal framework in place to really understand how to deal with mistakes made by AI agents.
One of the things that we went through this through crypto as well, right? I mean, what self-custody versus custodian, right? And I think there is an inherent psychological human element out there that really I need to be able to blame somebody, right? And I can't blame an agent. I can't blame an AI. Who am I going to blame there, right? It's like there's nobody to hold accountable. It's even, and people, even, I mean, one of the best examples I had, if you forget your phone in an Uber, you blame Uber. It's all Uber's fault. Man, they took my phone. They gone, right? Or it's like, but actually you forgot your phone in the Uber. So it's actually your responsibility, right? And it's like, it's just like all these little things that in humans' nature is to blame somebody. And I cannot hold a program accountable, but I can hold you, Andreas, personally accountable. If I need to go back onto somebody, you made the decision.
Yes. And I think we're some years away from really getting rid of that discussion. And as I said, I think we need a few court cases tested on this topic before we really get the legal framework in place. Because you're ultimately right. how do we define guilt or blames in an environment where AI agents take a lot of decisions?
Yeah.
Or will we ultimately end up in a world where AI agents de facto take the decisions, but not de jure, if you know what I mean? Will we always have like a human-facing people? Because you need someone to blame, and then that person can, ask for a humongous salary to basically just be the one who's responsible for all of the stuff that is ongoing behind the scenes. I don't know, but it could end up there.
But we have that. I mean, I could be an AI for all you know. I mean, with Aurora and all these tools, Banana Zone, and all these things coming out. What's it, the Banana Now? Or I can't remember what Google just launched. But all these tools coming out, we can really, I can have an AI agent acting as a person virtually, not physically, maybe a bit more challenging, but that'll change pretty soon. But yeah, I think the notion of self-custody, self-responsibility, self-sovereignty is going to grow more and more, and become a need to embed that in the education process for the next generations.
Well, and I guess this is the exact crossroads we're standing at. I mean, the move from Web 2 to Web 3 is basically about this, right? And I'm still exploring what that will mean to this whole, distribution journey and all of that. Because if we ultimately decentralize the ownership of data and all of that online, it also probably alters the picture a whole lot for X and Meta and all of these companies, right? To an extent that we don't know yet, and we don't know the full impact of that. So me as, a firm user of all of these channels, I also need to be agile to when this happens, right?
And I think what's happening, I mean, we spend a lot of our time sort of capturing real world data and then bringing that onto the blockchain and then trying to decentralize that data and making that accessible to everybody or anybody. And so as we capture more and more real world data and put that on chain, we're realizing there's a growing volume of data that's accumulating on chain, right? So on the internet, right? And as that data grows, we've already seen it in the Web 2 world, but that's been very centralized. And now as the trading of data and information grows across different blockchains, different applications sitting on those blockchains, how do you aggregate that data together? And how does that become an economical input into the overall data compiled together with that of real world data, and then the on-chain data, and then the internet data? So you have multiple sources that then structure your investment profile accordingly.
Yeah. It will be a super interesting topic. And one thing that's very close to my heart, Stefan, is how you use, for example, the data that you guys collect at Truflation to take better decisions as policymakers, right? I've spent a lot of my time researching monetary policy and fiscal policy, and I'm still puzzled that we haven't seen any whatsoever development in relation to trying to use real-time data to say something about growth and inflation and stuff like that. It would also lead to much less confusion around signaling from central bank members if we had some live data that everybody could access, right? The issue, which is why I really love the way that you frame this, is that the data that is provided by, for example, the Bureau of Labor Statistics on inflation, it's incredibly intransparent, and all of a sudden they end up modeling input instead of collecting prices and stuff like that, and you don't really know why and whether it alters the picture on inflation a whole lot and stuff like that. So there is a massive need for also the public sector to move in the direction of decentralization of data, etc., because it will increase the transparency of all of the decision making, not the opposite way around. And we're basically seeing the opposite right now, which is something you have to lament.
Yeah, and I think it's also bringing the primitive data sets on chain, right? I mean, one of the analogies that we do a lot, and I was just in the UK, met with some of the government officials there, because ultimately, given how do we take primitive data sets, put that on the blockchain, and allow independent investors to then be able to leverage that data and do their own calculations in terms of maybe where inflation's going? You can do your own calculation. Don't believe Truflation. Go do your own verification and then maybe reference Truflation, reference the BLS, and do whatever you want. But you can actually get primitive data sets that you can work into a calculation and use that as a differentiation in terms of what you're willing to pay for treasuries, for bonds. What is the yield you're willing to accept based on the parameters that you're working with and the output that you're getting from that input, right? And I think the market should define what yields are and what interest rates need to be in order to allocate capital towards that opportunity.
Yeah. I couldn't agree more. And,
Yeah.
Stefan, speaking of yields and interest rates, right? Was it a month ago you and I had a discussion on an X basis around this topic,
Yeah.
right? And we've actually seen bond yields coming down a little bit since that spaces, which is quite a surprise to many. I think we're in an era of what I typically label state capitalism, and we've seen the U.S. taking big steps towards that over the past 2 or 3 quarters, right? With the stake in Intel, with the loans to MP Materials and other very relevant companies within the supply chain of natural resources. And the one thing that I think is very misunderstood by many in this era of state capitalism is that as soon as you start running a country like an enterprise, the country will try to revenue maximize. So I think tariffs are, they're the first sign we're getting on this, that a country that is run like an enterprise will actually try to, increase its taxation. And I think it's a very sad development in the US that we're seeing signs towards increased taxation, for example, via tariffs. You could argue that there are political issues that you can sort of solve with tariffs, but it is by the end of the day a tax. And I think it's a symptom of a state capitalistic system that we see, signs of, or attempts to increase the revenue. So that's what I'm scared of here, that when we see state capitalism being, the most used system basically now on Earth in many ways, and at least the trends are moving in that direction, you're also seeing a state that will try and maximize its revenue, and that's ultimately not good for the free markets.
But how do you feel? I mean, in a way, they have to do something, right? I mean, the debts are we're coming close to 40 trillion. We passed 37. We're on our way to 38. Interest payments on that debt alone is $1 trillion+ a year. So you look at all of those elements that they've got to do something, right? The states, and I think it's not just the US, by the way, it's in China, it's in Europe, right? It's all over. How do these nations deal with it, right? I mean,
I think you're right. In order to pay down the debt, you obviously need to raise taxes, and I think a lot of people have told the U.S. administration that for a while, and they've not really done a lot about it. I held a lot of sympathy for the Department of Government Efficiency and their efforts to try and look at the other side of the equation, which is basically all of the bills that you have as a country, right? But I think even though they tasked some of the best entrepreneurs on earth with this job, I think the conclusion was pretty crystal clear after 2 or 3 months. It's an impossible job. I mean, it is almost impossible to get the sort of structural bill down when still considering that you need to be elected the next time there is an election, right? Which is always obviously the assumption they're working under, right? So I think you're right. In order to solve the debt question, they need to tax more. My assumption has always been that some kind of a wealth tax would be the ultimate weapon of choice. So those who make fortunes creating companies for the greater good, they'll have to ultimately pay a lot of money to help this situation.
But those individuals that actually can afford it, they're also very mobile, right? Their money and their wealth is equally mobile, right? And so they can actually go set up in jurisdictions that really matter. And so in the end, I feel that the biggest, weight is burdened by the middle class, those aspiring to move up, right? Those aspiring to break through the upper barrier into an area where then all of a sudden they can become mobile. But those are the ones you need. Those are the hardworking, the competitive participants in the field that you need to reward to keep the economy thriving and growing. It's definitely a challenging time for a lot of the economies around the world in dealing with this.
Yeah, you're right. You probably need some sort of universal wealth tax before you can really get a hold of the money from the trillionaires soon. they're still billionaires, right? But probably soon trillionaires. And
soon,
that is a tough ask to set up some sort of universal tax scheme on a topic like that. It probably will never happen. So you're right that we're probably talking about the layer just below that, taking a much bigger part of the bill than what is fair.
But I think one thing that for the people, there are, I really believe that there is a way for us to grow out of this, right? To drive growth. And I think given all the changes that are taking place in the economy, all across the field, from technology to semiconductors to data to crypto to genetics and biotech, etc., across all the gamut, robotics, all of that, there's a lot of opportunity that's going to drive and increase productivity and efficiencies in the ecosystem. And so as a result, how are we going to manage in that change and find opportunities in that change for the next generation to really take advantage of all of these changes taking place and disrupt and participate? And given that we're 8 billion people on the planet, it's definitely going to be an orchestration that I don't think the governments are cut out for.
I agree with you, Stefan, that AI or AGI holds the potential to be the biggest productivity boost in mankind in all of history, right? And whether that means 5% or 10% GDP growth or whatever we could get back to, I don't know, but the scope is humongous. And obviously that's one way of getting rid of a high debt ratio to GDP, by just growing the GDP enough. What I'm still uncertain about is how to deal with all of those people who will most likely be left behind, right? And some sort of universal basic income is probably unavoidable by the end of the day. We're already seeing very early signs of this, by the way, in labor statistics and productivity statistics, etc. I think it was just this week, the week where we were recording, Stefan, we got numbers for productivity in the second quarter of the year from the US, and they were sky high, right? I think it was 3.9%, something like that. And at the same time, we're not really seeing any strong hiring anywhere, right? Because why would you, if you're able to use AI to take some of the manual tasks, etc., right? And that's why I think a lot of people misread right now that they find a weak hiring and a weak labor market to be a symptom of a very bad economy. I don't necessarily think that's right. It's a symptom of a new economy that is much more productivity based, that is much more based on data centers, and much more based on investments into efficiency gains rather than investments into humans.
So I think that's where I think what you know your alpha stance, right? And you have a lot of opinions. You formulate those opinions and you express those as well across the different distribution platforms that are out there that we talked about earlier. And that's really what I like about what you're doing and your work and you and the team that behind you. But I think one of the things, where do you find and where are you seeing opportunities, in the next sort of 6-12 month horizon, where you think that, we talked about data centers, right? Where are you seeing opportunity given all the changes that are now taking place?
Yeah, so I still think that we're in the very early innings of this AI data center CapEx boom.
Yeah.
And that view is probably getting more and more mainstream, but it's still not accepted by a lot of the big institutions out there. They're still saying that this is very reminiscent of year 2000 and the dot-com bubble and all of that. The vast difference this time around is that we actually see earnings backing up the trends that we're seeing in equities, for example. So I don't think that the situation is particularly comparable to the run-up to the dot-com bubble. Was it a few weeks ago we got this research paper from MIT suggesting that 95% of all AI projects are either paused or scrapped in large corporations in the US. And nobody contextualized that number. So first of all, we're talking about projects running, 12, 18 months max. So is a hit ratio of 5% decent already after 12 months? Yeah, I don't think that's too bad. But look at the context versus other projects in, say, large investment banks or large pharma companies, whatever. The hit ratio in a project is typically pretty low in a company like that because, internal politics, change of directions and whatever. So I actually think that a lot of this skepticism around the AI cycle is still very misguided. And I think you and I agree on this, Stefan, that the opportunity here is immense, right? And that is, once again, why I'd like to stress that everything I see right now is an economy that is accelerating again. But we're just not seeing the typical signs of an acceleration because we're not seeing hiring. And that's, the odd one out in this cycle. We don't hire as many people because of AI. But we see signs of a productivity boom. And therefore, I'm, as more or less as upbeat as I can be on behalf of the 6 to 12 months returns here. I think we have way to go on everything AI, crypto related still in this cycle.
So it's like a super cycle type thing that everybody's been talking about, that we're going to see ongoing quick corrections, but still a forward momentum as people start to realize that there are different numbers that we need to take into account in the evaluation on how economies are performing.
Yeah, exactly. And once again, I think the most important thing is to, avoid all of the pessimists that will cite the lack of hiring and the lack of labor market momentum to on a running basis tell you not to be optimistic on the future. And that's generally my philosophy, Stephen. I'm almost perma optimistic. I don't like to take perma positions, but it pays off to be an optimist rather than a pessimist. And even though there are loads of reasons to be skeptical around everything from the Federal Reserve to the data quality of the Bureau of Labor Statistics and all of that, we're still moving forward, and the technological advance is just way more important than all of that noise.
Far outweigh that. Yeah. One of the barriers and limitations to the technical advancements, obviously, is, and it was interesting, sort of the whole energy debate, the data center rollouts, and the infrastructure related to that, right? And so, what's your view on that scenario? Will that limit the capacity? Will that change more on the dynamics in the world? How do you see that?
So I think one of the few advantages of moving towards state capitalism, also in the US, is that you can move pretty fast on topics like this. If your audience haven't checked out the chart on the Chinese solar expansion since 2023, I'll urge you to go look it up. Yeah, it's absolutely bizarre. So the expansion of the grid in China over the past, say, 18 to 24 months is outrageous. It's through the roof. It's off the charts, right? So of course you can do a lot in a short time, over a short time span. So I'm not overly scared of that. It reminds me a little bit of the discussion we had back in, say, the 70s and 80s, where we always discussed, do we have enough oil to keep the engine running, right? And here we are in 2025, we have more oil than ever. So I'm an optimist on behalf of humans, or our race, to be, if you know what I mean. We'll certainly find solutions on that. But I think near term, it's probably underestimated how far China has moved the needle on AI. And I myself hold some investments in Chinese AI-linked names as a consequence. I think there's a pretty decent catch-up trade to what we've seen in the US, since China's, they're strategically on top of this topic to an extent that is not particularly appreciated in the West.
And the adoption and the acceptance that technology is the way forward. I mean, they're leaning into that, right? The whole society, the whole population is behind the technological revolution, as they have benefited visibly for the last 30 years. They've been seeing 8-10% growth on average across China, right? 5% upwards. And that's thanks to technology. And so they are very pro technology. And so to me, that's super interesting. And I think we underestimate that. And one thing that was really interesting is that everybody says, the local Chinese entrepreneurs, the community over there, they do watch, and the governments, they watch everything that's taking place in the West, right? They're learning, they're sucking it up, listening to all the podcasts, everything. And we do very little about what's taking place in China, right? And this is a population of 1.4 billion that have some 500,000 engineering grads every year coming into the market, right? And so it's like, why aren't we studying more? Why aren't we listening to their podcasts? Why don't we have HeyGen translate all of their podcasts in real time so that we can even understand it in whatever language we want to listen to it in, right? And so it's...
This is so spot on. And it's a point that I've been making before. A lot of the people, both in the US but also in Europe, who talk about China and the developments in China, they've never even been there. I mean, how can you talk about and be an expert on such a topic without having been there? It's just simply plain stupid, in my opinion.
And they all laugh at it. They all think it's a joke, or they all, they don't. I mean, I lived in China. I launched my first business really in China, right? Or my second business in China. And I mean, it was, just this pace of development and to your element around state capitalism. China is, the ultimate state capitalism, right? It's the Communist Party above everything else, right? And they define, and the whole society moves forward with state capitalism based on the mandate, right? And they can build out solar farms wherever really quickly, which I think a lot of people don't realize that these data centers that they're building out, they're the size of Manhattan, right? These are huge, right? They're not just a little building in a city. It's the whole city, right? And I think, and the energy requirements that it has. And so it's going to be interesting. One view, yeah.
But Stefan, can I ask you, I've been to China quite a few times, right? But mostly traveled to Shanghai and Beijing, right? So where would you recommend people to go if they wanted to really truly get an experience in China, also from a technological standpoint?
Chongqing, man, go to Chongqing. It's like it's a whole municipality. It's about 20 million people living there. It's right in the middle of China. It's not on one of the coastal cities. I spent a lot of time in Wuhan, in Shenyang, and then there's Qingdao and Tianjin, but they were on the coastal cities. We were building out mobile networks in those cities. And Wuhan is another city. It's the hot hell it's a huge heat bowl in the summer, but in the winter, but all the car manufacturers are all there, right? They're all the suppliers, and that whole ecosystem around auto development is really around Wuhan is a big component there. But Chongqing to me is the ultimate city where, it's sort of a bit Blade Runner-esque, if you go, and these cities are 24/7. I mean, they have shifts. They work in 3 shifts. And I think people just don't realize that, it's like, and
Yeah,
modern.
we certainly don't do that around our neck of the woods, right, Stefan? So.
Yeah, but we also don't have 20 million population in each of our cities, right? I mean, I think there are each of this, I can't remember what the number is anymore, but it's like more than 10 cities with greater than 10 million population in China, right? And so you look at that, how do you manage that infrastructure? And everything in the mindset of the governments in China is just scale. Can you scale? You've never scaled at 1.4 billion. And so they don't even take into account, their whole question is around scalability. Can you scale, right? It's really, and it's a huge geography as well. I think a lot of people underestimate the size of the actual country as well. And so,
You're absolutely right. And, given the context of, I don't know, 20 million cities with, I don't know how many inhabitants in all these big cities, right? I just love that countries like, I'm Danish, still live in Copenhagen, right? That we think we're able to go to the United Nations and lecture China on wind turbines and why are you not buying this and this and this? And we're like, we're not even the size of one of their cities, right?
Yeah.
So I think the lack of realism, I put it like that, in Europe is still striking at this point.
And the work ethic there is very much a 996, right? 9 a.m. to 9 p.m., 6 days a week. And, they're all, that's sort of the environment. And if you want to chat with somebody on Sunday, I mean, obviously you respect Sunday a little bit. So if there's an emergency on Sunday, you're going to get a call, you respond to that. I mean, they maybe not instantly as quick as you would during a workday or weekday, but people do respond and turn things around even on a Sunday when they get back to a computer or when they're available. It's just a very different mindset in terms of that work-life mesh, I call it, not a work-life balance. It's meshed together. And so it's, what's your view on the Middle East, by the way? I mean, it's like, China was very big when the world was moving manufacturing to China, right? And China really became the manufacturing hub of real world products over there. Now we're seeing this whole real world move into the digital world, right? Internet markets across the board. And data centers are going to play a really big role in that. Oil, energy, it really matters. Space matters. Data center build-outs and rollout matters in that world. And we saw with Trump's visit to the Middle East, 5 gigawatt data center, boom, we'll launch it next year, right? We got the space, we got the energy, we just launched that, right? Hell high water. Where, and how do you see that world evolving? Will we become and have digital the digital worlds will be hosted in data centers.
So a few things on the Middle East. First of all, I think a country like Saudi Arabia, but the region overall, has managed to position itself in a very clever way in a multipolar world. So they're, for now at least, in positive terms, in bed with both the US and China at the same time. And they're one of the few regions really capable of being that. And I think that's been a very, very clever move from them. On top of that, I think you're right that they're also well positioned to gain from the era of AI data centers and all of that, since they have, you just need to stamp the ground down there, and then you have energy, right? So it makes their life easier from this perspective. I saw very interesting, like world heat map of where to mine a Bitcoin if you wanted to have the largest margin right now. And the interesting thing was that the answer to where you could get the largest margin from mining a Bitcoin was Iran.
Iran.
Yeah. I don't know whether it was fully fair, this world heat map, but it kind of showed which region to look at if you wanted to have large margins for Bitcoin mining, for example, right? And it's because of low energy costs. So this is an obvious advantage to them, that they have low energy costs and they're in a very strategic sweet spot in a multipolar world at the same time. So yes, I'm bullish on that region for a lot of reasons.
Yeah, it makes sense, really. I mean, in a way, I heard, if I remember correctly, Iran has a lot of oil, one of the biggest reserves in the world in oil, but they don't have refineries. So they work very closely with Qatar on the refinery. And so Qatar has the refinery, so they need that strait to get the oil back and forth all the time. But that was, so that makes sense that, I mean, ultimately, it's the cost of energy that really drives mining. From a Bitcoin perspective, right? I mean,
and you've obviously seen electricity prices through the roof in Germany and parts of Northern Europe, but also in the US now. The trend is really bad in the US as well. So they need to do something about that.
Going up again. Yeah, I mean, we're next week is inflation week, right? We had employment week this week. Next week is inflation week, so it'll be interesting. We're forecasting and we're seeing some trends around, sort of retail, sort of entertainment. I mean, obviously summer months, people are spending a bit more going on summer, so they spent a little more on recreation and entertainment than they did in the past, and the prices have gone up significantly in that category. Utilities, gas fees are up significantly as well. So yeah, it's beginning to pick up, and I think now we're going to reduce interest rates because of the employment data that came out this week. I personally actually think we're going to see a bigger drop in interest rates than the market anticipates. But then again, you never know. I mean, it's people, to your point, economists that are conformist, that are, as Scott Besson calls it, UBI workers, right? So it's like,
but the thing, I've invented the rule of economists myself, right? For every economist, there is an economist with the opposite view. And the second rule of economists is that they're both wrong, right? You never find an economist that is right about anything, right? I'm saying that as an economist myself, by the way. So I'm trying to have a laugh on behalf of my colleagues.
Yeah, so it's really where you put your mouth, where you put your money, that's where your mouth is, kind of thing. I don't know what the statement, the phrase is, but you've got to walk the talk, right? I mean, otherwise you're just talking. And I think so many of the economists just talk. They're happy to sit in the background and advise everybody and do these talks and presentations. But actually, and that's what I also like about what you're doing. You're actually really putting your money behind your directions. And so that's super, that's the way I think it should be.
Yeah, and I think it's the only way that you can actually back up your words. Because if you're just talking, you don't necessarily have the right incentive structure to say something right. If you know what I mean, you need to back it up.
You need to back it up, right? On that note, Andreas, how do people follow you? How do they get in touch? How do they, what are some of the, I mean, obviously, on X, but what else do you recommend? Do you have a Substack? You have
or else go to realvision.com. I do a lot of shows there. Some of them are available via YouTube, X, Twitch, etc. Right? But I host a show every Monday called Macro Mondays. And then I host 2 or 3 of the top investors worldwide and through the month. So at least as you do, right? I try to make some content that is readily available for people. And I love doing it.
Yeah. No, Raoul Pal's been a very big supporter of Truflation right from the beginning, and so have you. So thanks. I think the Real Vision platform is really good. And again, it's a great independent platform for to the right audience for all these different insights and investment opportunities. Macro Mondays, that's where everybody should go and follow Andreas and sign up to Real Vision maybe.
Yeah, but Macro Mondays is readily available for everyone. It's free of charge.
Okay, perfect. No, great. Well, thank you for your time. I think some insights, and I'm sure we'll do this again in the future as well, and then retrospectively look at some of the statements we make and see how accurate we were.
Yeah. Then I'll show up like this next time, right?
Yeah, exactly. We'll wear dark caps, no light.
Thanks very much for having me.
Thank you, Andreas. Thank you very much.